Welcome back to our live coverage of the World Economic Forum in Davos, Switzerland, where the sun is starting to go down.
Thankfully,
and for this,
because
I'm
you've
grateful.
been frying. We've both been frying, but especially her because she's on the sun
left side of my body. I want to welcome to the show ManpowerGroup CEO Jonas Prising. Jonas, great to see you.
Thanks for having me.
Now, you have a very unique perspective, I think, of the job market from your perch there as CEO of Manpower. And what are you seeing right now in terms of business confidence and hiring going forward? Because at least in the U.S., we know the job market is very strong right now.
And that's actually true also across the world. In most of the countries, certainly in the developed world, we're seeing unemployment at decade lows, and especially in the U.S., of course, at a 50-year low. Yeah. So the labor markets are healthy. Employment is high, unemployment is low. Wage inflation, generally speaking, though, is still relatively muted. So, every country thinks it's a country-specific issue, but it's actually a structural issue. It stays around the 2.5% to 3% wherever you look, even when the labor markets are very tight. But the labor markets, on the whole, are still very robust, and demand for workers is still strong.
So, Jonas, I got to follow up on that. I hear CEOs whining, quite honestly. We can't hire people. We can't. And then you say, well, wage growth is so tepid. Hello? Is there a disconnect? Don't these CEOs and these companies just need to pay people not just a little bit more, but a lot more to get people to come work at these companies?
Well, a big driver for wage inflation has to be productivity increases. And as you well know, across the world, we've not seen significant boost in productivity, which means you can't really afford to pay wages that are much higher. So that would be one factor.
Okay.
The other factor is averages are meaningless. So the average wage inflation is contained. But the underlying wage inflation for skills that are in high demand is actually very high.
Right.
The underlying demand and wage inflation for skills that are not as much in demand, either geographically or industry-based, is keeping a lid of it. And then I think the third point is you have global wage transparency to a degree that you've never had before. You're fully aware of where you reach a break-even point of having a worker in a physical location in the States, in a certain state, in a certain city, or having the work done somewhere else by a worker that is paid either in another country or in another geographic location within a country. So that, we believe, has acted as a dampener, and that is actually a new element in terms of how to think about the mechanics around wage inflation when labor markets are tight locally, how you can still stay muted, because today as an employer, you have other options in terms of where the work gets done, which you did not have before.
Interesting.
What about, especially in this latest jobs report, we saw a gap widen between managers and those who report into the managers. The pay for the lower skilled folks is growing faster than it is for managers. Do you think we're going to continue to see that trend, or will that pay gap start to close this year?
Well, I think that the pay gap and the inflation that we've seen started with higher skilled workers and managers. And so we saw more accelerated wage inflation for higher skilled people as well as management levels earlier on in the recovery. And now we're at the tail end of a recovery that can carry on for a long time, but you are now pulling people into the workforce, and you're doing so, you're attracting them in by making sure that you're moving the wages up.
You're catching up.
So we're catching up, exactly.
Jonas, I understand you're not a big fan of universal basic income, which is where people get a guaranteed sum of money every year. I mean, it sounds great, like a free lunch, UBI. What could possibly be wrong with that?
Well, universal, the basic assumption on work and the people working is that they're only working because they want to, get paid. The reality is work provides meaning and purpose to individuals. We have a lot of people, and in the U.S. lesser degrees, but here in Europe, people who are unemployed and have significant benefits. And some countries actually debate that you get more benefits and pay if you're employed rather than not. Yet those populations aren't any happier. So you have an issue around the motivation and the purpose and making people feel that they are contributing, which I think, basic income defeats. Also, when you look at all of the data that's been done and all of the tests, we have one here in Switzerland going on right now, Finland has done some, it's being tried in many different places. The outcomes are not that people use their time and resources to acquire new skills so they can re-enter. The impact of basic income in all its forms that has been tried has produced no result. And as such, the best thing we can do is enable people to get into the workforce by providing them with marketable skills. That's what's going to change their world. And
yeah,
life.
that's a great intro for my next question, which is automation in businesses. Do you see, when you're speaking to clients as well, are you getting the feeling that automation is creating more jobs than it is losing? And are companies really committed? They talk a lot about it, but are they really committed to upskilling their workers?
I think the data that we have so far is very clear. The impact of technology has increased the number of jobs. There are some sectors that have seen jobs being displaced, but more jobs have been created in other sectors. So if you think about all of the narrative around automation having a negative impact on job markets, none of the data that we have seen, and especially in the acceleration of the last 5 years, has proven to make that come true. You know, we are at the lowest unemployment levels we've had for decades in most places, yet the impact of technology is just increasing all the time. So speaking with employers and doing our own proprietary research, we've really seen that employers say, we're investing in technology and we will hire more people. By the same token, though, they are looking for people with specific and enhanced skills.
Right.
So that is where you get into the debate and the tension around skills shortages, which are at a decade high as well, because to be fully taking the benefit of technology, you need individuals and workers with higher levels and different skill sets than what they may have had in their prior occupation. So you have both of these dynamics that are working at the same time. But in my mind, there's no question that the impact of automation and technology is a positive driver for job creation as opposed to a threat.
Before we let you go, you're based in Milwaukee, big Milwaukee Bucks fan. You're going to be seeing a game coming up soon, I understand?
There's a big game where the Milwaukee Bucks are playing the Charlotte Hornets in Paris on Friday night. And it's the first NBA game ever played in France. And it's going to be a tremendous success because the Milwaukee Bucks are going to win as they've
How convenient.
and that
right?
they've continued
So you're
to
going to
do.
fly, you're going to leave Switzerland and go to France and go to
Catch
Paris.
my flight home from Paris on Saturday morning, but I'm going to get
Why
to
don't
see
we do
the
that
Milwaukee
too? Let's go
Bucks.
along.
I don't think
You
they're
should.
tickets. I don't think they're tickets. Anyway, clearly a man who's got it going on. Jonas Prising, ManpowerGroup CEO, thanks so much for joining us.
Thank you.